Hey, digital wildcatters, we are back. We're in a brand new studio. Thus, the black walls everywhere. That being said, we all have all sorts of neat, gimmicky things. Jacob now has a computer screen that y'all can't see, but it's right off camera. He's going to pop stuff up on us, and this is the new studio. Welcome back, Mark. Hadn't seen you in the studio.
Yeah, thank you.
In a while.
What's the facility called?
What are we calling this?
Wildcatter Warehouse?
Wildcatter Warehouse. Oh, yeah.
Clyde Warehouse.
Clyde Campus. Maybe
nice.
Not. It doesn't come off like Wildcatter Warehouse.
And this is the first
thing ever recorded in here.
In the new studio.
There it is. And anyway, so big announcement. Digital Wildcatters. And within 6 months, we'll be known as Clyde. Because every tech company is named after its product, and Clyde is our product. But we closed a $5 million seed round led by Mercury Ventures out of Houston. Blair, Alex, thank you very much for the money. Had numerous other notable oil and gas folks in there. Billy Quinn, Brian Sheffield, David Albin, Trey Yates. Who else? Gene Shepard came in. Dan Pickering came in. Sorry, Dan. And anyway, so really excited. We have completed our transition from kind of podcast media bros to being a legit AI enterprise software company. Kind of cool.
Big week.
Absolutely. It's funny. A lot of people have been texting, calling, hey, congratulations, saw the announcement on the deal and all. And it still comes back to what my dad always says. Dad's a doctor, and people go, well, what's the chances that I live, doc? And Dad always goes, well, it's either 100 or 0. You either will or you won't. So, we got $5 million. We still have to go build software, sell it, and monetize, but it's easier to do with some money. So,
and how's that going now that you have a job?
I do have a job. We may have to change the name of the podcast. Chuck Yates has a job. No, it's wild. Seeing the enthusiasm, receptivity to technology, AI, it's kind of top of mind, I think, with everyone. And just the ability to go out and search stuff really quickly is pretty exciting, given we all spend, half our time looking for shit. So.
Yeah, and getting better faster is, I think, everyone's ultimate objective. Now that
that's what she said.
Now that we find ourselves in another phase of sector, you want to call it stress, certainly not distress.
Where are we? How would you even describe? I mean, since the last time,
I don't know. I haven't looked at X in the last 5 minutes.
The run of show has changed 12 times since the last time we recorded it. Let's talk about this. Nope. It's changed. You got to talk about this.
Yeah, I think we vowed to, because we let off last year several weeks in a row with oil, but we're back. We're kind of back to that as the leading indicator of things that are most front of mind and topical. I'm pretty curious to see how earnings season kicks off and all of this uncertainty and what's happened to crude over the last couple of weeks since Liberation Day and OPEC's acceleration announcement.
Yeah, so just to level set, Trump comes out, announces tariffs on the whole wide world, 90-day reprieve, exceptions here and there seem to be floating out and all, but obviously havoc in the market. Markets collapsed, bounced back some, etc. Oil prices took it totally on the chin, have bounced back a little. Where are we? Mid 60s?
Good. Pushing 63 today. I think we're a little under 63. Having visited the upper mid 50s, although I don't think we've had a close in the 50s over the last week or two. But, I kind of look at, and it's on down the list, but one of the things that I was going back and forth with Arjun about in the midst of the beginning of all this was, we've got the announcement that OPEC is going to accelerate the restoration that they announced being on plan to start this spring.
And I think they actually have it. I mean, I think for years on the podcast, I've always said, I'm not sure OPEC really has the
so we don't need
spare
to look
capacity.
at the rig count.
I think they actually have it this time. So
yeah, and I look at it this way, and of course the industry is doing a bit of a double take because of what's happened and the notion that activity's going up, spending's going up, production's going up is pretty counter to what the industry has been through for the last 5 years at least, and some could argue the better part of the last 10 years being more disciplined, being focused on returns, less so about absolute production growth. And so I think somewhat cynically or creatively that Trump could point to what I call drill baby drill by proxy. I mean, he got $10 out of crude in a matter of less than a week with these announcements, and you've got an industry a bit on its heels again in terms of how it's thinking about near term and into next year capex. So
have we peaked? Has oil production finally peaked in the United States? I mean, it feels like the whole time we've been doing this podcast, I'm sitting there going, oh, we peaked. Nope, not yet. Oh, we peaked. Not yet.
We're still seeing a bow wave of efficiency gains. I think growth rates remain positive year over year, but certainly at a lower rate of change. A few 100,000 barrels a day this year over last year, and we performed above expectations in 23 and 24. So, we'll see. But I do think that there is, this is one clear, at least political win that Trump or one of the many promises in terms of both policy and the political expectations that have been set. I don't care about the details, that this isn't the U.S. producer group meaningfully adding to supply growth. Crude prices are down a lot in a very short period of time. So can point to that as when don't bother me with the details as a kind of a generalist or a consumer. I just know energy prices are coming down, and they came down pretty hard.
I said at NAPE on the panel, and NAPE was cool enough to let me release it as a podcast. So you should go check it out because Ann, Dan, Kathleen, everybody was really good on that panel. But I said, look, Trump's just a low oil guy. He always has been. I mean, he always has been, and he was going to get there by hook, crook, whatever. If it's bribing the Saudis, he's going to go bribe the Saudis. He's going to get his lower oil prices. We got to figure out what we can get out of Trump. And I think that, and we've talked about it on here too, is that's building infrastructure. Anything we need to get built, let's do it in the next 3 years. LNG export terminals, pipelines, power lines, whatever. We got to get that done.
That's fundamentally what drill baby drill means, which is a broader energy infrastructure and capacity expansion.
Yeah.
But our industry is certainly kind of raising an eyebrow here, and against the backdrop of
Chris Wright, come on, where are you, dude? Help.
Yeah, I mean, did we expect anything different though from a
well, as Brian Sheffield said, from a Yankee. He's a Yankee. He doesn't understand oil. But so I actually have an interesting data point. So last 2 days have been the MARC, the Minerals and Royalties Conference that Carl Brunzicki and the guys at Haymaker put on. And, it was really good stuff. Steve Trauber's speech supposedly just crushed, talking about the current environment, what's going on with the tariffs, and the like. Talking to a CEO, and I asked multiple of them, I'm like, have we seen a tariff in an AFE yet? And the answer was, nah, I haven't seen anything, except one guy said yes. And I said, oh, really? What's that? And he goes, It's interesting. I've been texting all day with my head operations guy. I haven't talked to him, so I don't have the details, but we've just been texting. Sand is domestic. It's, so that wasn't it. But supposedly steel and pipe prices, the pipe quote was 2x what it was 3 weeks ago.
That immediately.
It was anticipation of tariffs coming in. And
no doubt Chinese steel.
Well, this guy said American steel, but it was anticipating higher prices from the Chinese, and so they think they can capture some of it. Of course, E&P companies and service companies just do this all day. So he didn't know if this was just an opening salvo and they were going to back off. But he's like, yes, I have officially seen a tariff price now in an AFE.
Remember, Aubrey used to send out those mass letters in downturns.
Yeah.
Did you ever see those?
Yeah.
Yeah.
Oh, those are great.
Demanding across the board.
Yeah.
So what you're saying is, on the steel front, American suppliers are anticipating a higher price ceiling because they can raise their prices and still be more competitive with something that's got 125% tariff on it.
Yeah. No. Yeah. And so we've at least one data point. And the guy, the guy said, hey, when I talk to my ops guy, I'll call you and I'll walk you through it. So I'm expecting that phone call to learn more. But so where does this shake out? I mean, I think, so what I think happens is Trump just shook everything up. And whether it was premeditated or he had to just walk stuff back because the markets went crazy, doesn't really matter. We basically got to 10% tariffs on the rest of the world, and everybody seems pretty grateful about just having 10%. And supposedly 130 countries have reached out, including the island of penguins, supposedly, for negotiating trade deals. It looks like Japan's really serious about it. Israel's serious about it. The UK's serious about it. Don't know how serious Europe is, but they haven't retaliated. Canada retaliated. Mexico didn't. But it looks like something's going to happen there, and the administration will be announcing, I bet, a deal a week for the next several weeks of some sort.
So we have essentially what amounts to a 90-day cooling off period.
90-day cooling off period. We'll be announcing deals all there, but all eyes on China. So we're sitting there standing with China, and it's who blinks, who has the relative strength there. I think, consensus is America probably holds more cards there, but I'm not sure, because Xi is in office for life, and Trump arguably has 18 months given the midterms. So I don't know that we hold as many cards as we think we do.
Yeah, and one of the things that's supporting or boosting crude today, if you can call the move toward 63 a boost, we'll take it.
Yeah.
Is there seems to be some movement, at least, on starting negotiations. I read somewhere that China is demanding, quote unquote, more respect, and I think they've asked for a new primary contact, whatever that means. And so, this whole issue of the pause or the 10% standard, the 90-day thing is the thing that just keeps the markets off balance in terms of, okay, what happens after 90 days? Because not to get too far off the subject, although I think it's relevant, DRW put out a Substack yesterday called Dotting the I's and Crossing the T's. And on a lot of these high-profile issues or promises in execution of those things, the symbolism has been great early on in the administration, but the execution has been, in some cases, arguably sloppy. right? So if you take, for example, the notion that Russia-Ukraine would be resolved within 24 hours, or at least within the first 100 days, we've reached kind of an impasse where the president's impatience is starting to show and basically signaling to Russia, you got to put up or shut up. Well, what's clear in that chaos of back and forth on ceasefire and certain escalations of attacks is, the fundamental issues are still kind of intractable from either side. NATO membership, ultimately some time for Ukraine, and then Russia being able to hang on to its territory. So are we getting closer to this full ceasefire notion? When we had the kind of the start, we're going to call a ceasefire on attacks on energy infrastructure, but are we any closer? It kind of feels like we're stuck in the mud here.
My gut on, and I have no unique insight into Ukraine and Russia. Maybe we should ask Vlad next time we have coffee with
Saw
him.
This morning.
There you go. We can ask Vlad if he's got any insight. But my feeling is there was always a saying about the Middle East that it's always kind of darkest before the dawn. And when it gets really bad is usually when you have a breakthrough. And if you kind of trace through the history of that, it feels like with the three hard-headed people we have dealing with Russia, Ukraine, Trump, Putin, and Zelensky, it's going to have to be really bad and come to a head before something crystallizes. And maybe that is what's happening right now. I mean, the Russians just dropped some bombs. Civilians got hit. Trump's starting to lose his patience and saying, hey, we got all sorts of stuff we can throw at you, Russia. He's obviously lost his cool with Zelensky a few times, and that seems to be creeping up. So maybe we're at the point where something's going to happen, but can't disagree that it hasn't been we're done in 24 hours.
It's more of a commentary on just more broadly the execution across the the highest priority or the highest profile set of issues politically, whether it's immigration, whether it's Russia, Ukraine, whether it's China and tariffs and the trade war. There just seems to be quite a bit of unnecessary noise around that, and putting expectations out there that these things are going to reach resolution very quickly, I think is increasing the risk of the risk on the runway heading into next year in the midterm elections.
Although what I will say, what I've always said about Trump, because everybody's like, liberal friends are like, oh my God, he's such a liar and blah, blah, blah. I'm always like, yeah, but directionally he's right. And I think it's because at his core, he's a real estate agent. Hey, these are the greatest schools in all of Houston. This is the most beautiful street.
Right.
This is the best looking house you'll find. This is a great price on this. I mean, directionally, your real estate agent isn't lying to you, but they're definitely full of hyperbole, et cetera. So I think that's what you get a lot of times with Trump. Directionally, he's right. He probably is the only person that can get Zelensky and Putin to come to an agreement. It's not going to be 24 hours. And I do think you're right that ultimately that kind of devil in the details, actually getting stuff done. You've got the mainstream media just beating against him. Ultimately, where does that play out in the midstream is the big constraint on him.
Well, and I don't think it's squarely on the administration or singularly on the administration. Congress needs to get some stuff done too.
Totally.
Flurry of executive actions, but we need to.
We need a budget.
We need to make these policy pivots permanent in the form of legislation.
Yeah, because two things with all the market gyrations and blaming tariffs and all that. I mean, the largest tax increase in the history of the United States is staring us in the face unless Congress acts. And
right.
So that's some real risk right there. The other thing is I read this, Kyle Bass put up this tweet about a week or two. The Fed's actually shrunk its balance sheet by $2.3 trillion. So, I mean, guess which direction markets go when the Fed shrinks its balance sheet. So, I mean, definitely not. All right. So, prediction, where are we in 6 months on all of the litany of the things we're doing? So, where are we on tariffs associated with markets? Where are we on oil price? Where are we on Russian war? Let's do our predictions so we can be held accountable.
So 6 months is, a year out from midterm elections. I think we're resolved in some way, shape, or form on the key tariffs issue. I think we have to be, the political damage of, I'd read something about, I think it was an Ohio paper mill that had been operating since 1817, announced its closure as of this month because of the cost increase, the operating cost increases related to tariffs. I don't know what all the details are in behind that, but we can't have a litany of those types of things where the time to adjust to tariffs that prove, let's say after 90 days, we go back to the kind of the reciprocal and escalation in certain cases on key supply chain components. That's going to inflate costs. It's going to probably in the short run result in higher unemployment, et cetera. And you don't revitalize the manufacturing sector, which is one of the aims of the tariff strategy between now and the critical time of the midterm elections. What's your thought on the tariffs?
So here's ultimately what happens. 27 deals between now and the 90-day end. I think we're on day 83. So 83 days from now, 27 deals will be announced, including some biggies. Let's say Japan, maybe Israel, will be announced as agreed to or substantially agreed to. I think there's going to be a lot of, we have the framework for a deal with Japan, therefore we're suspending the tariffs indefinitely to get it done. So 27 of those will happen.
Why 27?
I'm looking into the crystal ball. It says 27. So 27 will be done. It'll be standoff with China. It's going to be full on escalation. Xi and Trump 6 months from now will have not sat down, will not have had a meeting. No talks have happened. I believe at the 6 month point, Trump plays the card of sending U.S. military planes into Taiwan.
Wow.
And he picks up basically the brain trust of Taiwan and gets them out of there. Because at the end of the day, what I've heard about those chip manufacturers is the buildings and stuff doesn't matter. It's maybe 200 people that know how to run those factories, know how to innovate, et cetera, that matter. So grabbing those 200 people and getting them out, you can hand Taiwan to China and they will not get the revenue machine they thought.
So we just bring them here to the U.S.
We'll just bring them here to the United States.
They get steeply discounted gold cards.
They get a gold card, complimentary gold card, and free buffet and cheap drinks. So I think I'm being flippant here, but I do think it escalates with China, and neither side's given in kind of on 6 months. I don't know ultimately what the impact will be on the economy in that. I mean, I have a sneaking suspicion that both sides will turn a blind eye to China goods going through Vietnam coming here. So maybe functionally we won't have the big tariffs in place on either side. But I think it's gonna go longer, and I hope I'm wrong. I mean, I hope Trump and Xi sit down and figure this out.
Yeah, he's got a lot on his plate. We haven't even talked about Iran.
Yeah.
So, what was the second issue?
I forget. We were talking tariffs. Ultimately, what does that do to oil price, the economy? What else did I say? Anyway, we were making predictions on all of it, and I've forgotten. So go to Iran. Direct talks with the Iranians
Are starting.
Supposedly round one went well enough that they're going out on the second date.
Which is, I believe, in Rome.
Is it in Rome?
I think so.
Yeah. Very interesting, because at the end of the day, I think at least what I've heard communicated is you're not going to have a nuclear bomb. And if not, us and Israel are going to destroy your capability on that front. It's your choice. So this is less about a framework of a deal and how much uranium can you negotiate, as opposed to we get to check up on you. Let's figure out those rules.
Yeah, and I may have this wrong, but wasn't one of the have-to-haves on the Iranian side, we reserve our right to enrich uranium?
Yeah.
Which obviously has a weapons end game. And so, is that like the set of non-negotiables that are essentially still in place with respect to Russia and Ukraine as an example? And does this ultimately get anywhere, or do we end up sanctioning Iran and with more aggressive enforcement of theoretically driving their oil exports to zero?
Yeah.
Is that where this goes? Are you hopeful that we're going to get to some resolution within that 6-month forecast timeframe that you talked about with the Iranian negotiations?
Yeah. At the end of the day, I've always wondered, if I was a dictator of a third world country of some sort, I think I'm good. It's like, I kind of run a country here. I got some nice beaches. I hear the skiing in the mountains outside of Tehran. It's very nice. Like, why would I want to go to war with the great Satan? It's okay to kind of rattle your saber about him, but why would I actually want to go to war with him? So I'm hoping there's an element of that plays out with the Ayatollah of just, do I really want to risk the fact that they'll unleash Israel and their own bombers on me? No. Okay. We'll figure out some gracious way to back down from this. All right. What else do we have?
So moving north of the border, I thought the piece that Doomberg put out this morning, what I call Canadian Federalism and Rapid Permitting Reform, the title of the piece was "The Fix Is In." And it's basically, look, I think everybody can agree that Carney's going to win the election next.
Which is stunning.
Yeah, it's absolutely stunning.
6 months ago, I never would have thought, when that dude was sitting there, I'm blanking on who the opposition guy is, but he was eating the apple, being interviewed. I was like, oh man, this guy wins 80% of the vote.
Yeah, so the thesis in this piece is that, you've got a country that for the last 20 years has more or less blocked or shut down or been slow about building needed energy infrastructure, mainly pipelines for egress out of Alberta to either the Pacific coast or across Canada to Quebec, where the demand centers are. And they posit that, ultimately, because, the premiers of Alberta and Quebec are now talking, there's, kind of a rising patriotism and federalism in Canada that, ultimately Carney's going to take office and really fall in line, and you're going to see a real domino effect with respect to permitting and getting some things done. And I think the most interesting point, or the most amusing point to me, is, climate was really the fly in the ointment to getting things done over the last 15, 20 years in Canada. Very effective oppositions. The only thing that really got built in terms of major projects was Trans Mountain. And that was way late and about 4 times budget. It ended up costing over $30 billion. I don't know if it was Canadian or US. I think it was US dollars. But the notion that Trump is a greater threat, mainly because of what's happened in the early stages of the administration, the back and forth, Canada's 51st state, et cetera, that now we're going to get things done and get this infrastructure that's key to both our national security and economic well-being, and that the climate-based opposition is ultimately going to be defanged in Canada. So that's the prediction. We're going to see a lot of activity in Canada with support from the U.S. In fact, I don't recall Trump in the last couple of weeks uttering any of that rhetoric. Governor Trudeau and
yeah, that may have just been directed at Trudeau, not the Canadians. But
so I think it's an interesting thesis or hypothesis about what may break the inertia that has beset Canada and this jolt that they've gotten from the threat of tariffs and this whole despite the fact that we did have some exemption and relief on Liberation Day for Canadian energy imports, which makes all the sense in the world, by the way.
Yeah, no, I mean, we definitely want to remain as pregnant as possible with Canadian energy, just so it always has a home in the United States. The other thing, though, that I think, the more I read about it is real, is there really is fentanyl stuff going on in Canada. That was not a made-up thing by the Trump administration. They've busted multiple labs where they're importing stuff from China and mixing it in Canada. So there was something real to that.
Yeah, and people trivializing the fact that the seizures last year amounted to 43 pounds.
Yeah, enough to kill 10 million people.
Yeah, in pure form, it kills 10 million people. That's enough lethal dosages to kill.
And that's just what we caught.
Right.
I mean, yeah, who can imagine that? So anyway, yeah, stunning. I mean, who would have ever thought Canada would vote for? But whatever.
Yeah. So you talked about gas and LNG. Kind of the last item here is, I think it happened last week. Mubadala, which is the sovereign wealth fund of the Emirates, announced a 24% stake in conjunction with Cheniere in a joint venture that they set up around both Cheniere Texas Gas and this Commonwealth LNG project that is planned. It's pre-FID that's planned for Calcasieu Pass. And if you remember, ADNOC's CEO announced at CERAWeek that they had planned over time and starting very quickly. You'll see signs of it. Both ADNOC and Mubadala are state-owned entities. They're separate. I haven't found any kind of overlap and affiliation, but there very well may be some. But you're starting to see very quickly, pretty good activity as it relates to making commitments to the U.S. and developing jointly and investing in the build out of U.S. energy infrastructure in this SOTEX, as they call it, this Cheniere SOTEX venture with Mubadala taking a pretty big stake is, kind of putting your money where your mouth is. Now, again, the LNG project itself, which I think is on the order of $4.5 to $5 billion, is still pre-FID. But if everything falls into place, they're going to be they're going to be sending out beginning in 2029. So it's not that far away.
I'm not going to get this right because I'm not an LNG guy. I haven't been a midstream guy during my career, but there's supposedly a process of some sort, and it's got a form number for it for LNG that you have to fill out to be able to get like the first check mark to even start thinking about building an LNG facility in the United States. The FERC requires this. And I may be getting all these details wrong, but the spirit of this is right. There have been rumors that the Trump administration is just going to waive that. You don't even have to do that. Just go on to step 2. And, this step 1 has some sort of environmental impact study, et cetera, associated with it. And that the Trump administration may just say, nah, go ahead, start building these things.
Yeah, I wrote about it a little piece on Collide last week, and just broadly on LNG on the heels of the tariff dust up. And to your earlier point about, have we seen tariffs show up in essentially well construction, which is mostly, I think, steel and consumables related that may be imported from China. And or, not going to call it price gouging, opportunistic price increases that domestic suppliers see. What does that mean for, and your forecast that we're going to kind of have a rough go here and be at a standstill or an impasse with China on tariffs? What does that mean for the projects we just talked about, like, a Commonwealth or, I wrote about it in the context of Venture Global. Remember, Secretary Wright and Interior Secretary Burgum went down to Venture Global's Plaquemine expansion site, which is like an $18 billion project. What of all the steel and aluminum, if we're looking at the shock and awe price increases that were indicated anecdotally by the intelligence that you got. So risking capital with more clouds of uncertainty is just not, it's not a recipe for getting things done in a timely fashion until those clouds clear and we get some more clarity on where all this is going.
Yeah. Yeah.
Because these are meaningful proportions of overall project costs and certainly measurably impactful on returns.
Yeah. Sitting there staring at, a midterm election, 18 months away, and a presidential election 3.5 years away, where President Newsom or whatever, that's going to be an interesting balancing act for these energy companies of, all right, we got to pay more for steel prices, but at least we get it built and we have it for 30 years.
All right. If you were in your former chair heading into the rest of 2025 in terms of activity, and I only bring this up because I believe Q1 earnings season, which I'm guessing in energy company Q&A is going to be hyper focused on what adjustments are you making relative to tariffs and the uncertainty around them. What do you think is going to happen?
I mean, the beauty of being a private equity backed company is you literally toggle on that switch when you want to, and you toggle off that switch when you want to. And so potentially what we would have done at run-ups is we might have gone and purchased a bunch of pipe, kind of in advance.
Yep.
Of Trump winning the election, but in advance of him taking office. So we potentially would have had inventory for that. I guarantee you, if I was still sitting in that seat, we would have done a lot in the way of hedging. Because, Trump's just a lower oil guy, lower price oil guy. And so then you sit with those, hedges, particularly when prices have dropped, and pipes sitting in inventory. Both those become assets, and you just work the math of, well, is it better to drill a well with that stuff or do I monetize that stuff now that the bet has done right? So that's what we'd be looking at in the board book is, okay, what are the rates of return if we drill these things? Another thing that I didn't have to look at, because we bought early stage assets, we proved it up enough to sell to the next guy. So we really didn't hold things. We didn't turn into manufacturing companies where we had to develop projects. That would be an interesting dynamic, because you're going, okay, we shouldn't drill for all the reasons we just laid out. But man, I got a big G&A budget now because I'm capable of doing that. I've got all the people in place. And what do I do with that?
Yeah, I think the publics are going to be a little different just because they have to comment publicly or they're going to get asked questions about it. And, the thing I'm wrestling with is, are they going to take, because, behind the scenes, and some more vocally than others, I think Kay's tweeted about something in the immediate aftermath of the tariffs. If we could find that tweet, I know I sent it to John last week about, basically better have a good explanation of how all this works, because you've got the double whammy going on with our industry with, the tariff uncertainty and potential cost escalation, along with certainly an air pocket in commodity prices, in crude oil in particular. And so do they take the opportunity in Q1 forums to adjust 2025 capital spending, which they talked about in late January, early February, in Q4 calls? Do they take the opportunity to send a message that, we're making pretty significant adjustments to in the downward direction to capital? Because more or less what you've seen from the more prominent players and reading between the lines is flat to slightly up versus last year. But I think there's certainly downside risk to those spending plans. It's just a question of how much the industry, in essence, through what it says publicly on its calls, are they going to punch back a little bit here?
Yeah. And, at the end of the day, I've never understood why our industry isn't more just transparent about all this with investors. I mean, because at the end of the day, if you continuously disappoint, people don't trust you, and you get the worst case scenario anyway.
Right.
So why not just say, hey, we're watching these tariff things. I'm actually going to drop some rigs. I feel like there's plenty of rig availability. We can ramp back up when we want to. And I need to feel good that I've got, pick a number, $70 oil flat for a sustainable before I'm going to drill. And I'll tell you what, every bit of cash flow we get, we're going to pay down debt, buy back stock, and pay dividends. So,
well, I've talked about it before too. I don't think, and hopefully this is like the inverse Kramer, but the IEA was out today also talking about adjusting demand expectations for 25 to be the demand growth in 2025 to be the lowest in 5 years. And that 5 years obviously started back during the COVID trough. So, I tend to think that this is OPEC's decisions to accelerate were a little bit of playing ball politically. And if you remember the first call that Trump made post-inauguration, like same day, was to the Saudis.
Yeah.
And so I don't think these things are coincidental.
Right.
He gets a political win, but I also don't think that, the players in that group that decided to restore production, keep in mind that OPEC, when they made that announcement, they can reserve the right to adjust based on market conditions. My belief is the Russians certainly don't want that, because they're so heavily dependent on their economy, so heavily dependent upon higher oil prices as a very concentrated part of their of their revenue and GDP. So, is this just a test case to maybe push some of the higher growth non-OPEC players further back on their heels and maybe opportunistically grab a bit more market share here that they lost, when shale was capturing it all in the last 10 years.
Yeah. All right. You know how we should take this out now that we have this new tool? Hey, Jacob. Yeah. Play the announcement video of the cartoon that Colin did. Play that here at the end, and Mark and I will watch it real quick, and then we'll comment before we say goodbye.
With rolling blackouts affecting millions and fuel shortages reported across the country, officials are scrambling to find immediate solutions as the situation escalates.
It's amazing how it kind of looks like Colin. Who'd have thought?
Is there sound?
The world's power is restored.
So, friend of the program, Russell Gold from Texas Monthly, put on my LinkedIn, I have questions. Is that briny water he drinks? And have you copyrighted that new drilling technique? So, I do think the video slaps, though. I think it's cool.
Yeah, I agree. I think the production value is really high. Creativity's even better.
There we go. All right. Again, Mercury, thank you so much for the money. And folks, if you enjoyed the podcast, tell a friend, share it, leave us comments. Remember, my ego is really, really fragile, so don't be mean in the comments, and we'll see you next week.